Good morning, welcome to CATEX-TV. My name is Frank Fortunato. This is a live broadcast from Princeton, New Jersey. Today is Wednesday, June 2nd, 2010. It's 11:30 a.m. Eastern Daylight Time in the United States, 4:30 p.m. in London. In Hamilton, it's 12:30 p.m. and in Mexico City, 10:30 in the morning. If you need to reach us during the broadcast, you can phone in toll-free at 1-866-67-CATEX. Overseas, our AOL Instant Mail address is CATEX-TV. On this date, in 1953, 57 years ago, Queen Elizabeth II became the Queen of England. She was coronated in Westminster Abbey. Also birthdays today, Charlie Watts, the drummer for the Rolling Stones, is 69 years old today. We'll go to our news. Well, for the first time in a long time, the lead story is not British Petroleum, although it could well be, but it has to be the scuttled Prudential AIG deal. Prudential has conceded to shareholder pressure and has dropped plans to acquire the Asian life insurance division of AIG. AIG refused to accept revised deal terms. AIG scrapped hopes of the restructured deal to purchase American International Assurance by Prudential with a lower purchase price of around $30 billion. Prudential UK said that ending the deal would cost it $225 million US in breakup fees, while other fees relating to the aborted deal could come to about $440 million. That's just a shade under $600 million. Prudential will also abandon its proposed $21 billion rights issue, but said that its strategy remains focused on Asia. Well, for a little while anyway. The CEO of Prudential, Tidjane Thiam, pictured here, said that Prudential had agreed with shareholders that a renegotiation of the terms was necessary, quote, given market movements, unquote, but that it had not been possible to reach agreement. The annual general meeting is set for 5 days from now, June 7th. That's still going to go ahead. Whether or not Mr. Thiam and the chairman, Harvey McGrath, are still going to be in their positions at the end of that meeting remains to be seen. Well, to BP, the first news is that there's stories coming over the wire right now being reported by the U.S. Coast Guard that the diamond saw that is being used by BP to cut through the oil riser 5,000 feet below the surface has suddenly become stuck. If you go to the live camera stream at bp.com, you can see it's stuck. Meanwhile, oil now has just about hit the Florida coast up at the Panhandle beaches. What they're working on now would actually decapitate whatever remaining part of the wellhead was in place at the bottom of the well, increase the flow of oil by 20%, and then attempt to cap it. And even if they do cap it, they're simply going to be able to capture a part of the spill and bring it up to containment vessels on the top. Yesterday, the U.S. Justice Department announced that it's looking at criminal and civil probes into the spill, although the department did not name specific targets. BP has already lost $75 billion in market value since the spill began on April 20th. Experts expect that the damage claims are going to total billions of dollars more than what have already been put forth. Florida officials confirmed that the spill is about 9 miles from the Pensacola beach where the summer tourist season is just beginning. Crude has already polluted 125 miles of Louisiana coastline, and it's been reported in barrier islands in Alabama and Mississippi. 1/3 of the federal fishing waters in the Gulf of Mexico are off limits for fishing. According to the Attorney General of the United States, Eric Holder, who visited the scene yesterday, if we find evidence of illegal behavior, we will be extremely forceful in our response. Experts warned that what BP is trying to do now could be even riskier than any of the other things they've tried to do. They're slicing open the 20-inch riser, which is jutting up from the seafloor. That, as I mentioned, is going to release more oil. And then, according to Ed Overton, a professor of environmental sciences at Louisiana State University, then it becomes an engineer's nightmare. Quote, they're trying to fit a 21-inch cap over a 20-inch pipe a mile underwater. That's just horrendously hard to do. It's not like you and I standing on the ground pushing. They're using little robots to do this. BP's best chance of permanently plugging the well rests with a pair of relief wells that are being drilled but will not be completed until August. Well, in Washington, D.C. today, actually this is in New York City. It's in New York City, a former Moody's, the ratings agency attorney, who worked in the ratings firm's structured finance group for 10 years, told the congressional committee that Moody's, quote, gave up its analytical distinctiveness, partly by intimidating analysts who were too tough or angered influential investment bankers. In testimony to the Financial Crisis Inquiry Commission, the attorney, Mark Froba, accused Moody managers of having deliberately engineered a change to its culture intended to ensure that rating analysis never jeopardized market share and revenue. Also testifying at the hearing today is Warren Buffett. Buffett's Berkshire Hathaway has long owned a stake in Moody's. Buffett did not give any advance prepared testimony. He also voluntarily declined an invitation to appear and thus had to be subpoenaed. The 10-member commission is led by former California Treasurer Phil Angelides and is scheduled to submit a report of its findings to the President by December 15th. Well, in Lloyd's, there's a new syndicate. It's Chubb 1882. It's going to have 41.5 million pounds of capacity for the remainder of 2010. It received approval from the Lloyd's Franchise Board. 1882 goes back to the year that Chubb was created. It's going to be managed by the managing agency of Chubb Managing Agent Limited. That's already authorized by the FSA. The syndicate's going to write marine and professional indemnity business and some specialist classes such as technology. The active underwriter is Rob Cage, C-A-G-E, who was previously Chubb's UK head of commercial business. They're all pretty juiced up about this at Chubb, as they should be. Down in Tallahassee, the Florida Governor Charlie Crist has vetoed a bill that would have streamlined the process for approving insurance rate hikes up to 10%. He said that consumers should not have to be concerned with an additional premium increase to their policy. Crist is running for the U.S. Senate as an independent. He vetoed the bill in spite of urgings to sign it by the industry and his insurance commissioner, Kevin McCarty. Crist said that during these very difficult economic times, our consumers should not have to be concerned with an additional premium increase to their policy. The industry supported the bill, which would have permitted them to retain a portion of replacement cost claims payments until they had proof that the repairs had actually been done. A gentleman representing the Florida Association of Insurance Agents said that a veto would be a bad day for Florida. Well, there could be more bad days for Florida if our friends at AM Best have anything to say about it. They're expressing concern over the claims-paying capacity of the Florida Hurricane Catastrophe Fund, and they've updated their treatment of reinsurance provided to entities from the FHCF. Best is worried that the FHCF will be able to bond, whether the FHCF will be able to bond potentially the largest public debt offering in history of the state of Florida if the hurricane season turns out to be a bad one and if it needs cash to cover claims. AM Best said that the fund's mandatory layer will be reduced by 5% in AM Best's assessment of risk-adjusted capitalization. Given the lack of funding regarding the temporary increase in coverage limits, no credit, 100% reduction, will be provided for this layer, as was the case previously. They say that this just simply reflects the projected borrowing capacity costs, and it will represent a more accurate view. No kidding, if they have a couple of big name storms down there, it's going to be very tough to sell any bonds. Dow Jones Industrial Average is up about 83 points. It was up about 83 points yesterday at this time, then nosedived later in the day. We'll go to a word from our sponsors.
Every day, the world wakes up and goes to work, pursuing the unique opportunities that lead the global economy forward. The complexity and close connectivity of today's global marketplace is a true modern miracle that can create unparalleled success. But it takes confidence, passion, innovation,